Does a currency depreciate post rate hike by the central bank? If you said no, let me talk about euro. Good morning and welcome to Almus Market Mornings. We bring you the latest developments in the financial markets. It was an action-packed day yesterday. The euro fell to its lowest level in more than 5 months against the dollar post a rate hike by the ECB. China cut its reserve ratio requirements, which is nothing but the amount the lenders must hold in reserve. This is the second cut this year. US posted good retail sales data, beating expectations on a month-on-month basis. And I don't need to tell you about oil, which has been inching up. Brent trading above $94 a barrel now. Good morning, Pankaj. Great to have you back. Interesting set of moves yesterday. What's your take on the markets?
Hey, thanks, Swaraj. Good morning, everyone. So basically, the primary news which drove the market yesterday evening, it was ECB rate hike. It clearly indicates that they were very, very dovish in the commentary, but they hiked the rate, and market took that in a stride that probably they are not further rate hikes are happening. There was a clear statement that from a Lagarde, we can't say that it's a peak rates, but we are higher for longer. At the same point of time, press release was most of the members were thinking that we have reached peak rates. So market reaction to the ECB hike was clearly very dovish, and we don't think they can hike further without a deeper slump in the GDP. So Eurozone deposit rates have already reached 5%, US at 5.5%. So these are kind of a massive move from zero levels, about 4% in Euro and 5.5% in US. Market would be, or interest rates market would be consolidating, and expectations of rate hike would also be consolidating in these area. Even as threat of stagflation in Europe remains real because the inflation is still sticky, still higher. Even the rise in oil prices recently may not sustain, as it would put the demand side of the larger economies downward and may force the output to be cut by OPEC eventually. Euro hit a 4-month low yesterday at 1.0631 after the ECB decision. And as I mentioned earlier, it seems that the peak rates in ECB already for Euro region have been already reached. Combined with the weakness in Euro and overall strength in the US economy, the both data which came yesterday, it's a PPI or retail sales. They were much better than expectation. We feel that dollar index might stay strong or might stay unlikely to correct lower from here in a stride. The data from two major economies, UK and China, has been also weaker, and that give a clearly yield advantage to US, and that probably will keep greenback in demand. The next week we will be seeing a FOMC on Wednesday and Thursday. Tuesday and Wednesday they have a meeting. Indian market would be able to react on a Thursday morning. As of now, the expectations that this meeting they will be keeping quiet. They won't be raising rates, but the commentary would be important. And this week they will also be releasing economic economic assessment statement, and people would be looking at what they are whether they are lowering the GDP data or inflation. So we'll be watching that. Stocks were mainly higher in US and Europe, held by the robust consumption data, and economy overall in US able to adjust with, as of now looks like adjust with the higher rates. Somewhere global markets, equities market was subdued. Brent, as you mentioned, Swaraj, is traded higher above 94. I think the latest action by China reserve ratio cut has put commodities prices back into action. Let's come back to Chinese currency. PBOC is very, very serious about its currency. They are fixing the currency consistently lower. Today, also, they fixed 1.5% lower than the market rate of 7.28. They fixed at 7.1786. And that's almost a 11 figure below where the market is trading. I would also like to mention that Indian 10-year bond GSEC bond continue its drift lower. Yield continue its drift lower. We have seen that the demand has been emerged after the RBI basically introduced international norms of accounting for Indian bonds for the valuation purpose. So banks can now decide their HTM portfolio, their size, available for sell and held for trading, and that gives a advantage to people to basically account according to their financial statements and according to their individual policies rather than RBI guided policy. Somehow gold managed to stay higher at 1900, even the euro weakened and dollar index strengthened. The 1900 has been seen a major support yesterday, and it bounced back almost 1% from that level. Currently trading at 1915, 1916. Coming back to India currency, the independent trajectory of rupee, it looks like set to continue with only marginal influence from a global cues. And probably this is due to the tight lease in which RBI operating as of now. Yesterday, dollar index strength driven by strong data from US and ECB dovish hike is unlikely to push dollar rupee much higher. Maybe 83, 10, 15 RBI itself would be there. But at the lower levels of dollar rupee, maybe 82, 90, 95, the market itself will be buying it. But sustaining of this trend in the dollar index will make the rupee overvalued in RER terms. It looks like we are already overvalued because the central bank likely allow it to be corrected by market forces, particularly if it's driven by the genuine flows. We therefore expect that as of now, the range continues between the 80 and 83.30. We will be defining levels if we break 83.30 on a higher side. That's all from me. Have a nice weekend. And the next week also, we will have a Ganpati on Tuesday. So I'm already praying for everyone that great Lord Ganesha will provide us all the success and happiness. Thank you. Thanks a lot.
Thank you, Pankaj. And the narrative for the Eurozone has now become a threat of stagflation as higher inflation and lower growth persists in the economies. For the US, PPI and retail sales were both better than expectations. UK and China economic data has been on the weaker front. And next week, we have the FOMC on Tuesday and Wednesday. And as of now, the expectation is of a no hike this meeting. What's interesting is the PBOC has been fixing yuan lower. Today's fixing was nearly 1.5% lower. While for rupee, we continue to trade in a tight range as on the higher levels, RBI is present, and on the lower levels, we have the market buyers. That's it from us today. Thanks for listening. Tune in on Monday for the latest in the financial markets. Thank you so much.